Ladies and gentlemen, members of the press, dear colleagues, welcome to the presentation of the Annual Financial Stability Report for 2016. Consistent with best international practice, for the third year in a row, we have been presenting to you our analyses aimed at assessing the resilience of the financial system to shocks and the measures that we adopt in order to make the system even more resilient. Serbia is a small and open economy, which is why the developments in the international environment, notably in the euro area, may impact the domestic financial system. Last year saw a slowdown in global economic growth, the UK's decision to withdraw from the EU, and soaring oil prices following the decision of the major producers to cap oil production for the first time since 2008. Coupled with this, the divergence of monetary policies of the leading central banks still remains the key factor of uncertainty in the international financial market, given that the ECB decided to extend the quantitative easing program at least until late 2017, while the Fed continued with monetary policy normalization. But last night it kept its rate at the current level, and it postponed the decision on normalization for the period ahead. These decisions of the leading central banks may affect capital flows to emerging economies, including Serbia. Carefully following the developments in the domestic and international markets, we responded in a timely fashion, which, along with full coordination with fiscal policy, helped further narrow the internal and external imbalances in 2016. This buttressed the resilience of our economy to influences from the international environment. At the same time, we achieved economic growth, low inflation, a relatively stable exchange rate, and earned and maintained the trust of foreign investors in the domestic economy. The cycle of key policy rate cuts, launched in May 2013, continued in 2016. Still, we exercised due caution over uncertainties in the international commodity and financial markets. The key policy rate was cut to 4%, its lowest level in the inflation targeting regime. As a result, and given the falling risk premium of the country, interest rates on corporate and household loans declined, whilst government borrowing costs fell to their lowest. The country's risk premium, as at today's date, equals 140 basis points. And these figures, and on the 25th of July, it was 132, and these figures are unprecedented. Furthermore, a reduction in average dinar and foreign currency borrowing costs was certainly one of the factors leading to a better financial result of the corporate sector. In 2016, economic agents achieved 3.5 times higher positive net financial result compared to 2015. I presented concrete data at the presentation of the May inflation report. The share of corporate NPLs in total NPLs declined significantly, as well as the number of economic agents with blocked accounts in enforced collection. Inflation running low for 3 years, strengthening of macroeconomic fundamentals, and better prospects going forward opened room to make the decision in November last year to lower the inflation target to 3% plus minus 1.5 percentage points starting from 2017. That this decision was justified is indicated by inflation moving within the new lower target band as of early this year, as well as by anchored inflation expectations of the financial and corporate sectors. This serves as the best confirmation of credibility of the National Bank of Serbia's monetary policy. Significant progress in the fiscal policy field continued in 2016. The general government deficit equaled 1.3% of GDP, this being the most favorable fiscal result in the past 10 years. The public debt share in GDP headed down for the first time since 2008. When it comes to Serbia's financial sector, all facts testify to its stability, as my colleagues will also corroborate. Given that the financial sector is bank-centric, the financial health of banks and their capacity to perform their core function of financial intermediation is key for maintaining financial stability. In this context, it is important that banks operating in Serbia largely rely on domestic, stable sources of funding. This reduces banks' exposure to risks stemming from the international environment and mitigates the risk of sudden withdrawal of funds by parent banks, which was one of the challenges facing the countries in the region in the crisis period. In 2016, Serbia's banking sector remained well-capitalized and highly liquid, with higher profitability compared to the same period last year. Quarterly macro-prudential stress tests confirm high resilience of the banking sector to different macroeconomic shocks. Namely, the banking sector would remain adequately capitalized and liquid even if the worst-case macroeconomic scenario materialized. The extension of household loans stepped up further in 2016. Acceleration of economic activity, favorable trends in the labor market, and a further decline in interest rates and loans impacted the growth in loan demand. As a consequence of higher demand and the supply of loans, the volume of new household loans was by 33% higher in 2016 compared to 2015, with close to 75% pertaining to dinar loans. The achieved results of overall economic policy have been confirmed by the IMF, credit rating agencies, foreign investors, and the EBRD, which was the first international financial institution to issue dinar securities in the Serbian market. The issue of these securities gave a contribution to the process of dinarization, which is one of our priorities. The results have also been confirmed by Serbia's progress on the Doing Business list, with the country ranking among 10 countries that achieved the strongest progress. We are satisfied with the fact that by achieving the main objectives of the National Bank of Serbia, these being preservation of price and financial stability, we contribute to the improvement of the position of our country in the international context. The National Bank of Serbia's efforts in the past period focused also on resolving the NPL issue. I can say with great pleasure that the National Bank of Serbia's action plan for implementation of the NPL resolution strategy has been fully implemented within the envisaged deadlines. Banks' capacities have been strengthened, with improvements made in the field of application of accounting standards, transparency of bank operation, practice of forbearance, and the development of the NPL market. The results of these activities are more than obvious. In May 2017, the share of NPLs in total banking sector loans equaled 16.1%, this being its lowest level since 2010. Let me remind you that in August 2015, when the strategy was adopted, this share stood at 22.2%. This implies a drop of over 6 percentage points, which confirms that the systemic interinstitutional and coordinated approach of the National Bank of Serbia, the government and market participants is yielding the desired results. By analyzing the risks that may jeopardize financial stability, we always aim to act preemptively, among other things by enhancing the regulatory framework in accordance with the EU acquis and a strategy for introduction of Basel III standards in Serbia. The regulations transposing these standards in the domestic legislation were adopted in December 2016, with the start of application on the 30th of June 2017. We may freely say that as of that date, the operation of Serbian banks is regulated in the same way as in EU countries. The introduction of Basel III standards will further increase the already high resilience of the banking sector by enhancing the quality of capital, better monitoring and control of risks, strengthening market discipline and transparency of bank operations. An important novelty are the capital buffers, which increase the quality of bank capital and further limit systemic risks, thereby contributing to the preservation and strengthening of the stability of Serbia's financial system. Ladies and gentlemen, members of the press, dear colleagues, behind us is the year in which, owing to efficient coordination of monetary, fiscal, micro-prudential and macro-prudential policy, macroeconomic stability of the country has been preserved and the resilience of the domestic financial system strengthened. The National Bank of Serbia will remain committed to long-term stability of our financial system in the general interest of all participants, this being a precondition for long-term sustainability of economic growth. Thank you for your attention. This is an annual report. Please do not take amiss my length. And now I would like to give the floor to Vice Governor Diana Dragutinovic. She is in charge of financial stability at the NBS.
Ladies and gentlemen, dear colleagues, friends and members of the press, it is my great pleasure to greet you at the press conference in which we will present our annual financial stability report. At the beginning, allow me to remind you of the goals of this report. First, since the expectations are critical for shaping the behavior of economic agents, our task was to provide a sufficient amount of reliable information to financial market participants and to the public as a whole about the condition of the system, its resilience within the one-year time horizon to risks, to strong risks, and also to present all the activities implemented by the National Bank of Serbia in order to strengthen the resilience of the system. We expect that the familiarization with the risks will affect a change in the behavior of economic agents by deterring them from undertaking high-risk activities. Second, assessing the present and the future system resilience and stability, we also presented the methodological framework, the analytical tools we are using to assess this stability. In that way, we wish to open a dialogue with the academic community to draw young, and not only young, researchers' attention to the importance of research of financial stability. We learn not only from the past, but from others too. In this area, there is sufficient room for cooperation between economic profession and financial profession and other professions, for example, physics, biology, geography, chemistry, mathematics. So, for example, the NBS researchers use network modeling to estimate the so-called contagion risks, that is, the spillover of negative effects to other participants in the banking system. This is the method that has a long history in mathematical literature, but is a relatively new tool in economics and finance. In this way, we wish to invite the academic community to join us, to help us in terms of application of new analytical models, which will help us to better assess financial stability. And we are also open to criticism. Allow me also to repeat once again that one of the key tasks of a central bank and of the National Bank of Serbia, of course, is to ensure and preserve the stability of the financial system as a whole. However, nothing is more important for financial stability than the sound banking sector. The central role of banks in the financial system results from their specific role. By providing loans to clients, they, in a way, provide a service or a product which can hardly be substituted with other products, especially in the case of small businesses and households. Also, via maturity transformation, that is, by this maturity transformation, they actually create liquidity, and that's not all. If you compare the activity of the banking sector, you'll see that you have a relatively big sector in terms of the participation in GDP. Within the system, it's very important. It's interconnected with other sectors, with households, corporates, with the government, and above all, it's also under the strong influence of macroeconomic movements. So it acts pro-cyclically during the upturn of the credit cycle, acting conversely once the credit cycle turns. Today, we know what we need. We need a resilient, highly liquid and capitalized, well-regulated banking system, sufficiently strong to sustain fierce shocks and to support economic growth by credit activity at all stages of the economic cycle. What we also know today is that this ambitious task requires the use of at least two approaches in order to identify risk at an early stage. The first one is based on the analysis of trends and interconnectedness of cyclical risks, such as, for example, indebtedness of all sectors, households, corporate, government, financial sector, etc., liquidity, maturity transformation, and as well as risk assessment. The second approach examines the resilience of every individual financial institution or a bank. Here I made a distinction between a shock and risk. Shock is an event that is difficult to predict or prevent, while risk represents a fundamental weakness in a system which actually induces expansion and amplification of the initial shock. Unlike a sudden shock, risk has a tendency to accumulate over time, and that's why the role of the National Bank of Serbia is to apply its policy and to limit the accumulation of such risk and reduce the probability of the occurrence of a systemic event. The first approach relies on a big set of indicators over a longer time horizon so that cyclical risk could be identified. And what we do? We actually compare the current level of an indicator and its most probable future path with historical values to determine whether the present condition indicates a low, average, or high risk level. The second approach focuses on individual institutions, which means that we have a large number of indicators for every bank, for every financial institution, and based on these data, we can reveal how risky are their models of their behavior, and we can identify those institutions whose behavior significantly deviates from the average, and we exactly know what are these implications, how the problems in one particular institution can cause, what problems they can cause in a system as a whole and within other institutions. The financial system can act either as a buffer to unfavorable shocks or as their amplifier. How it will work depends on how prepared it is for the unfavorable scenario. A system with limited liquidity and little capital will amplify the shock. Conversely, a system with adequate capital and liquidity buffers will have the capacity to support the economy and to amortize shocks. Let me remind you of the key regulatory reforms and activities we undertook, believing that the transposition of international standards into our regulations will make our system even more resilient and with capacity to fight on its own any potential problems in functioning of an individual institution without resorting to taxpayers' money. The National Bank of Serbia became responsible by this regulatory reform for the so-called macro-prudential policy. As part of that, the first key novelty was to establish, in addition to minimal capital requirements, also different capital buffers, which are actually intended for covering specifically defined risks. For example, cyclical risks, such as excessive credit growth, which we faced in 2007-2008, or excessive increase in the prices of assets. Also to cover risks that actually arise from some structural features, for example, high degree of financial realization of exchange rate movements, but also to cover risks with systemic importance. The second key novelty is the introduction of new liquidity standards. The first standard requires from banks to have a sufficient amount of high-quality liquid assets, easily convertible to cash, with or without little discount, which enables them to sustain a deposit outflow over 30 calendar days. The second standard is complementary to the first one, and it requires that the banks finance their activities with sufficiently stable sources of funding in the period of 1 year. Given that the NBS is responsible for macro-prudential policy, stress tests, which are conducted regularly on a quarterly basis, have this macro-prudential dimension, which means that we observe whether each individual institution or a group of institutions, for example, of systemically important institutions or the banking sector as a whole, has sufficient capital and liquidity to sustain strong macroeconomic or financial shock. In case that a bank which has critical functions is faced with problems, the resolution network will be activated, which is the third key novelty of the new regulations. Strict standards as to the structure of liabilities need to ensure a controlled exit of a bank from the market while protecting not only the critical functions, but also the taxpayers' money. The key tool of resolution in a series of such instruments allows for the first time that in addition to shareholders, owners, that also creditors also bear part of the losses, the so-called bail-in tool. Finally, same as in other countries, as of January 2018, we will apply new international reporting standards. The concept of realized losses is substituted by the concept of expected losses, which will have a bearing on the result of banks in the part of impairment of financial assets and allowances for impairment. This change is designed in such a way that allowances for impairment should be higher than they used to be, and in such a way the resilience of the financial system will be strengthened. Ladies and gentlemen, dear colleagues, friends and members of the press, before I give the floor to the General Manager of the department, allow me to conclude with the following messages. Financial system stability is only one of the priorities of the society as a whole, but it is the primary objective of the NBS together with the stability of prices. Stability of the exchange rate, which does not imply a fixed exchange rate, but exchange rate of limited volatility is a precondition for preserving and strengthening of financial stability. And this is the characteristic, the result of the characteristics of the Serbian economy. It is a small and open economy, highly dependent on imports, and vulnerable to shocks on the supply side, such as fluctuations in oil and primary commodity prices, as well as it's vulnerable to the changes in the direction and volume of international capital flows. Our economy is also highly Euroized, not only because of a long history of inflation, but also of its characteristics of being a small country which does not have the possibility to borrow in the international market in its own currency. Also, a significant part of that of all sectors, household, corporate and government, is in foreign currency. Our financial sector is also integrated within the global system because leading local banks are subsidiaries of large cross-border banking groups. Because of the characteristics of our financial system, the stability of the exchange rate is a precondition of this financial stability. High FX reserves represent an important component of our economic defense. Adequate FX reserves provide for swift liquidity support in situations of shaken confidence and in situations of need. A combination of fiscal policy on the one hand and monetary and regulatory policies of the NBS on the other has created a more favorable macroeconomic picture in 2016 compared to 2015. These more favorable movements and characteristics of the economy were conducive for the financial stability. The banking sector has been more stable in 2016 than in 2015, although it was stable in 2015 as well. However, even with the appropriate combination of policies in place, financial stability is never guaranteed, and that is why early risk detection based on early warning indicators is of key importance. Currently, the strongest risks stem from the international environment. For example, deterioration of investor sentiment could cause significant shifts in international capital to the detriment of countries such as Serbia. However, further improvement of macroeconomic characteristics and reduction in external and internal imbalances will reduce this risk, unlike the situation before 2008. Also, regulatory uncertainties also persist. Although all international standards are embedded in our regulations, the reforms are not completed yet. 80% of Basel III is practically functioning, but around 20% is not there. As a consequence, these capital standards, after these agreements will probably be higher than before, than in the current regime. The crisis has revealed the dangers of approving too many loans. However, refraining from lending is no less dangerous. I would make an analogy with the bodily weight and its impact on health. It's not good to be overweighted, but it's also not good to be anorexic. So you must strike a balance also in credit activity as well. So some activities must be financed even in bad times, while many others do not deserve to be financed even in good times. Judging by the standard indicators of credit activity, it could be concluded that it has underperformed its long-term trend. However, beneath the stagnant credit activity, dynamic processes unfold. Acceleration of new lending on the one hand and intensified cleaning of banks' balance sheets on the other side. Since new loans show the actual activity of credit institutions, this is the real indicator, it may be said that credit activity is not constraining economic growth. Finally, about non-performing loans, they have never been a threat to financial system stability in Serbia, though they have been a drag on profitability and credit activity of banks. Cleaning of balance sheets through write-off and sale was incentivized primarily by the NBS's regulatory and supervisory measures. Of course, banks were able to respond to these incentives because of the high coverage of NPLs by allowances for impairment and regulatory provisions and high capital adequacy. In the period from mid-2015, I say mid-2015 because that's when the NPLs were the highest, until end 2016, the NPL share decreased by more than 6 percentage points. If we would focus only on corporate sector, including entities in bankruptcy, this drop in NPLs was even more substantial, by 9.5 percentage points. NPL reduction continued into 2017, which tells us that the growth in credit activity will continue, especially bearing in mind that final accounts of corporates show a significant growth potential. The NBS's role is to ensure that this growth should be neither excessive nor insufficient from the standpoint of sustainable economic growth. Thank you for your attention. Darko Kovačević, General Manager of the Financial Stability Department.
Darko Kovačević, General Manager of the Financial Stability Department. Ladies and gentlemen, dear colleagues, members of the press, welcome to the presentation of the third annual Financial Stability Report. And this report relates to 2016. Here we will give an overview of the situation in the financial system, and we will present the key risks to this system. Traditionally, this report analyzes the key segments of the financial system, such as the international environment, then the segment of financial intermediaries, financial infrastructure, and financial markets. The report also presents the results of macro-prudential stress tests at the level of the banking sector on data from December 2016, while the very end of the report is devoted to the overall assessment of financial stability and the quantification of the level of systemic risk. Furthermore, we have given several text boxes on the topic of financial stability relating to 2016 and early 2017. We also present the key risks stemming from the international environment and the measures for the mitigation of these risks. The slowdown in economic activity at the global level, primarily of the developed countries, soaring oil prices, the decision of the UK to leave the EU, and the divergence of monetary policies of the ECB and the Fed are the key risks from the international environment which marked the last year. The deviation of the Fed's monetary policy from the policies of the leading central banks could impact an increase in uncertainties in the international financial market and capital flows to emerging markets. Given the high presence of banks with foreign capital in the domestic market, the developments in the euro area and developments in terms of credit activity can to a certain extent affect the financing of subsidiaries in Serbia. According to the results of the survey of the European Investment Bank on bank credit activity in the region of Central and Southeastern Europe, the risk of reducing the exposure is at an approximately the same level as last year, but it is significantly lower than in 2013 and 2014 due to facilitated access to domestic sources of funding, primarily the deposits of the corporate and household sectors. Besides, we wish to emphasize that after the period of exceptionally low interest rates of the leading central banks in the medium term, we can expect the growth, which in conditions of variable, changeable interest rates can lead to a higher price of borrowing and servicing of the current liabilities. One of important risks is the high level of euroization of the domestic financial system. Around 70% of receivables and corporate and household deposits are FX denominated. Given that the currency structure of receivables and obligations of banks are matched, banks are not highly exposed to the FX risk. risk. On the other hand, we have many clients who borrow in the foreign currency, and at the same time they earn in dinars, and thus they're exposed to the FX risk, whereas banks are exposed to the credit risk. Also, a high level of euroization weakens the transmission mechanism of monetary policy, and as a result, the key policy rate impacts only a part of the domestic credit market. Another risk that has been discussed a lot recently, and where we have achieved significant progress last year, is a relatively high level of NPLs and relating low and uneven credit activity. We have to emphasize that NPLs are not a problem of the financial system only, but they also affect the real sector, because they can influence the tightening of credit standards of the bank, and they can also in this way, by extension, affect the economic growth. As we said, the slowdown in economic growth of advanced economies, uncertainties regarding movements of primary commodities, notably oil, the UK's decision to leave the EU, and divergent monetary policies of the leading central banks are the key risks coming from the international environment. According to the IMF projections from April 2017, we expect moderate growth in the euro area of 1.7% in 2017 and 1.6% in 2018. Also, we have to note that the projections, that the forecasts of economic growth of the euro area are marked with a high level of uncertainty over the manner and possible consequences of Brexit. Also, the banking crisis in Italy, triggered by the high and rising level of NPLs, was a source of instability in 2016 in the banking market of the euro area. Euro area inflation was exceptionally low in the first half of 2016. It was often in negative territory, but by the end of the year, it stood at 1.1%. Responding to low inflationary pressures and weaker economic growth, the ECB decided to extend the quantitative easing program at least until the end of 2017. Unlike 2016, the Fed's decision to hike the rate did not cause any stronger volatility in financial markets. If we compare the stability of the domestic system compared to 2015, we can say that it has been strengthened primarily because of the falling share of public debt in GDP and a reduction in external imbalances. Public debt was reduced 1 year than 1 year before it was planned, but it was in line with the projections from the last year's financial stability report. The share of public debt in GDP equaled 72.9% at the end of 2016, which is by 1.8 percentage points lower compared to 2015. According to Public Debt Administration, early 2017 saw a further drop in the share of public debt in GDP to the current level of 67.1%. Also, when it comes to a reduction in external imbalances, the current account deficit fell from 4.7% in 2015 to 4% in 2016. The share of fiscal deficit in GDP equaled 1.3% at the end of 2016, which is by 2.4 percentage points lower than in 2015. In 2016, GDP grew by 2.8%. It was led mainly by a vigorous rise in investments and net exports. We expect that economic growth will accelerate further to 3% in 2017 on account of the same effect as present in 2016. Low inflationary pressures were present in 2016, and the inflation was low and stable throughout the year. Also, 2016 saw relative stability of the exchange rate. Early last year, we saw depreciation pressures, especially over the the tightening of the Fed's monetary policy and the announcement of the UK referendum, but these effects were mitigated by a timely response of the NPS. Since June 2016, we have seen appreciation pressures over the expected accommodation of monetary policies of the leading central banks and the appeasement of the international markets after the published results of the UK referendum. In 2016, the key policy rate was cut by total 0.5 percentage points to 4%. Baonia throughout the year continued to oscillate below the key policy rate. Stable macroeconomic situation, cuts in the key policy rate, a stable exchange rate and low inflation led to a fall in the country's risk premium and to the improvement in the country's credit rating. Owing to the effects of monetary policy easing, the cost of corporate borrowing declined. At the end of 2016, the average interest rate on new dinar loans was 5.4%, which is down by 0.8 percentage points compared to 2015. In the same period, average rates on new euro-indexed loans fell from 4.2% to 3.1%, owing to a decline in Euribor and the improved prospects of the Serbian economy. Interest rates on dinar and euro-indexed household loans are at the lowest historical level. A decline in dinar interest rates was due to the easing of monetary policy, but also it is due to higher competition, interbank competition in the credit market. Interest rates on new dinar loans fell by 1.2 percentage points to 10.8%. In the same period, interest rates on new euro-indexed loans fell by 1.6 percentage points to 4.4%. A reduction in interest rates and more favorable market conditions can, in the coming period, positively affect credit activity and thus economic growth. As you know, Serbia entered the crisis with a high level of NPLs, which is one of the main reasons for the high level of NPLs in the post-crisis period. As a result of the strategy as a result of the NPL resolution strategy, gross NPLs fell at the end of 2016 from 21% to 17%, which is a reduction of 4.6 percentage points. According to the latest data, this share is even lower. It equals 16.1%, which is the lowest level of NPLs since 2010. Also, in the coming period, we expect a further decline in NPLs. Broken down by sector, the share of NPLs is higher in the corporate sector than in the household sector. NPLs do not jeopardize financial stability because these loans are fully covered by regulatory reserves and allowances for impairment. In 2016, the banking sector recorded a positive financial result, and it was more profitable compared to 2015, with a return on equity of 3.4%. All the profitability indicators are positive. They are lower compared to the region average, but the first half of 2017 indicates a further strengthening of the business result of the banking sector. The share domestic corporate loans fell by 3.8% in real terms due to the write-off and the assignment of receivables to non-banking sector entities. Excluding these effects, domestic corporate loans the rise in these loans would be 1.5% year on year. The credit risk of the corporate sector, measured by the share of NPLs at the end of 2016, was 70.2%. It was down by 4.5 percentage points compared to 2015, owing to the NPL resolution strategy as well as the collection, write-off and assignment of a part of NPLs. The sharpest decline of NPLs was noted reported in construction and trade. Owing to the recovery of economic activity, reduced the cost of government borrowing and preserved stability of the exchange rate, in 2016 companies recorded an excellent business result. All sectors operated positively apart from construction, which also saw a significant improvement in the rate of return. The net financial result of the corporate sector was around 230 billion dinars with a return on equity of 5.5%, which is almost three times more compared to 2015. Given that over 90% of assets of the domestic financial system pertains to the banking sector, the developments in the banking sector are especially important. The capital adequacy ratio of 21.8% in December 2016, that is of 22.3% in March 2017, is above the regional average. We also have to say that the capital adequacy ratio is much higher compared to the minimum ratio prescribed by domestic regulations and the Basel standards. In the structure of regulatory capital, we have, in terms of Tier 1 capital, we have the highest Tier 1 capital accounts for around 92% of regulatory capital. When it comes to the assets of the banking sector, around 60% of assets go to loans. Cash and cash equivalents and holdings with the central bank make up around 15% of total bank assets, which signals high liquidity of the banking sector. When it comes to sources of financing, banks in Serbia rely more increasingly on domestic stable sources of funding. Total deposits made up 70% of liabilities at the end of 2016. The strengthening of the domestic deposit base enables banks to reduce the exposure to parent companies, and this reduces the exposure of banks to risks to international environment. Stress tests are an analytical tool enabling timely detection of possible consequences in case of exceptionally negative developments. But we have to say that bad results of stress tests do not mean necessarily that a bank, a group of banks and the banking sector as a whole would face problems, but this serves for a timely assessment of the operation of banks in the case of little probable scenarios. The credit risk is the most present risk in our banking system, and it accounts for over 87% of total capital requirements. According to the baseline projection, the NPLs are likely to decline further, and the capital adequacy ratio from the initial 21.8% would increase to 22.3%. According to the moderate scenario, the capital adequacy ratio would equal 18.9%, whereas according to the worst case scenario, the capital adequacy ratio would equal 15.6%. This means that the capital adequacy ratio of the banking sector, even in the worst case scenario, would remain far above the regulatory minimum. The results of the last round of stress tests based on data from March 2017 are even more favorable. The capital adequacy ratio in case of the worst case scenario would equal 16.4%, which signals exceptional resilience of banks to credit risk. A liquidity risk is not present to such an extent as credit risk. However, the developments in October 2008, when around 10% of deposits from domestic banks were withdrawn, indicates the importance of following this risk. And for these needs, we assume three scenarios. The first, déjà vu scenario of 2008 implies the withdrawal of around 10% of total deposits. The spillover scenario implies deposit withdrawal of around 15% of total deposits, and the worst case scenario implies a stronger shock than the one that took place in 2008. That is the withdrawal of 21% of total deposits. The banking sector, even in the case of the worst case scenario, would remain liquid with a capital adequacy ratio of 1.27. We can conclude that even in the conditions of the least favorable developments, our banking sector would remain adequately capitalized and highly liquid. When we talk about the non-banking financial sector, the insurance sector is stable with a high adequacy of capital and excellent business results. Net result of insurance companies at the end of 2016 was as much as 5.7 billion dinars, with the return on equity of 12.9%, which is up by 6.3 percentage points relative to 2015. On the other hand, the modest share of 6% in the assets of the financial sector indicates ample potential for the further development of this sector. The sector of voluntary pension funds continued to yield positive results, reflected in a rise in net assets of 14% and the rate of return on Fondex of 7.7%. The financial leasing sector recorded positive results concerning a rise in assets of 10% and a positive business result of 1.3 billion dinars, which, given that this sector accounts for only 2% of assets of the financial system, represents a very important business result. The period from January to December 2016 saw high stability, with the exception of a somewhat higher level of stress early in the year in the capital market and the money market due to heightened uncertainties in the international market. This relates to the continuation of seasonal depreciation pressures from the end of 2015 and the rise in the risk premium of emerging economies. The middle of the year saw a higher level of stress over Brexit. The overall 2016 saw the relatively stable exchange rate and low and stable inflation. GDP growth and the reduction in the current account deficit contributed to better macroeconomic performances of Serbia, which was recognized by international institutions and rating agencies as well. This led to a reduction in the country's risk premium and an improved credit rating of the country. The domestic banking sector is adequately capitalized, highly liquid, and profitable, with the lowest level of NPLs over the last several years. Also, the non-banking sector saw significant business results, which jointly contributed to the low level of the systemic stress indicator in 2016. And at the very end, I would like to invite you to take a look at the text boxes in which we have analyzed some of the most topical issues regarding financial stability and in this way, I would like to conclude the presentation of the annual financial stability report for 2016. I would like to thank you for your attention, and please bear in mind that the topic of our today's press conference is the financial system as a whole. So when asking your question, please bear this in mind. So thank you once again for your attention, and now we can start with your questions.
Mediana Zec, Magazine Court. I was thrilled with this data on the reduction of external debt to 67%. I would like to hear some comments, first of all from the governor, whether this is a trend that will continue in the future and whether the debt will reduce further, or whether this was just some favorable moment to achieve this result. This was first question. The second question, your announcement that is Diana Dragotivinović's announcement that you're opening possibilities for cooperation with numerous young and not so young researchers and corporates. it's a very positive message. So if you could say a few words about that as well. Thank you very much. Would you like to hear about this data from Darko? And I'll continue. Speaking about the public debt, according to the latest data of the Public Debt Administration, this share reduced further to 65.7%. I think this is the latest data. So this reduction of public debt share in GDP, which was also covered by our report, you will be able to see on the website that the whole chapter is devoted to the stress test of the public debt. So in all scenarios, except in a case of a combined shock, so in all scenarios, this public debt share will continue to decline. We have forecasted this reduction last year as well. If you look at the last year's report for 2016, you will be able to see that last year as well we have projected the reduction in public debt share to a level a bit higher than this 67%, but we projected the fall also. All this time we have been speaking about the coordination of monetary and fiscal policy. This is not a theoretical statement or but this relies on substantial data. And this is illustrated by the data of the fall of public debt. Although all this time we are regularly servicing all the liabilities due, at the time when these debts were concluded in 2008, 2009, there was a grace period, but these years are actually the years of intensified repayment of debt, of principal and interest as well. So we try to reduce the cost of interest, partly due to the trends in the European Union and to the trends of Euribor, but also the fall of interest rates in the country was also partly owing to the developments in the country, because the government also had liabilities toward domestic creditors. Anytime when somebody look at some isolated data, for example, about foreign exchange reserves, and then they say at the end of 2016 they stood at 10.2 billion. At this day, they stand at 9.7 billion. But all the liabilities that we are talking about, which indicate the reduction of public debt relative to GDP. So what does this mean? It means that this 9.7 billion are net FX reserves of 8 billion, which enable this type of low-risk premium and interest of investors to come and invest in Serbia. From 9.7 billion, only 1.7 billion is liability towards the banks from these FX reserves. The rest is FX reserves of the government of Serbia, which ensures stability. And it is my satisfaction to emphasize this data: 19.3 tons of gold. All this time you have heard about the exchange rate stability, and this is also an important data which contributed to the reduction of the public debt share in GDP. It's not an incident, it did not rely on a particular moment, it is a trend. We have the executive authorities have announced that this trend will start and that it will continue, but we are not able to state with certainty at what dynamics, because last night you heard that euro strengthened against the dollar and Fed postponed its normalization, that is kept its rate at current levels. So we are not able to predict with certainty. European Central Bank continues with their facilities, and so in such divergent circumstances we are thinking about debt as a government, we are thinking about debt in euro, about our debt in dollar, and we are contemplating our future activities jointly and with all due care. And Diana will speak a little more about the involvement of the academic community, but I will say something more. For over 1 year and longer, we have cooperated with 11 faculties, mathematical faculty, faculty of organizational sciences, economical faculty. So their students, the best students from these faculties, come to our institution for a summer internship, and then they're engaged on the most creative, most challenging task in the National Bank of Serbia. But we usually present our results, and we do not always present all our methods. And all these results are presented, for example, in reports such as this, report on financial stability.
The governor gave a practical answer, and I would like to add a few sentences. The very topic of financial stability is really relatively new, and it was discussed, actually discussions about it started only in late 2017, that is with the outbreak of the financial crisis. Until then, this topic was not discussed at all. So today you don't have, when it comes to financial stability, a standard text book from which students could learn in a systematic way what this means, nor is there a standard theory. But in time, this theory is being built. And it seems to me that practice goes ahead of theory, and central banks on their own, including the National Bank of Serbia, as well as central banks across Europe, they have developed their own departments for financial stability and research work. This is not enough, of course, and this is why our central bank regularly organizes this summer practice for the best students, and we always have the best students engaged in the issues such as financial stability as well. This is a regular task, annual task, and as a result of cooperation with 11 faculties, we have students who are still who still have not graduated, but who are being trained in our departments for these activities. What my greatest wish is, perhaps, is that to attract researchers from faculties, because there is a thin line between mathematics, statistics, and so on. So we would like to involve those ready researchers from faculties. They can write papers, give their suggestions, criticisms, perhaps as well, because we are pioneers when it comes to the analysis of financial stability. Darko, please add something to the exchange of our annual FSR with other central banks. Let us not forget that. For the first time this year, we have established the exchange of the FSR with the governors of other central banks. As Madam Governor said a month ago, we have received the Hungarian FSR, and this practice will continue in future. So all friends of the central bank will receive our printed FSR as a nice introduction to future, even more extensive cooperation. Of course, the problems are similar always. Hello? Television N1. You said that the NPL share has been reduced this year. So how was this achieved, and what about the companies posting losses and public enterprises? So we have the general manager of the bank supervision department, and perhaps Vlada could add something to this as well. So the reduction in the share of NPLs in total NPLs relative to the end of last year from 17.03, and this was actually achieved through the collection of receivables worth around 87 billion dinars, direct write-off 45 billion, and the assignment was also one of the legitimate methods of resolving the NPL issue. It accounted for around 30 billion dinars. And as at the 30th of June. These are the last preliminary data. The survey deadline was the 30th of July, and we are verifying these data. So this share, according to latest data, equals 15.58%, and we are taking further activities to reduce this rate by the end of the year. And I would like to add a few figures as well. You asked something about the corporate sector. The strongest decline in NPLs compared to December 2018 was recorded in construction and trade. In construction, as at June 2017, this decline equaled around 8 billion, and in trade it was around 22 billion dinars. So these are the major factors contributing to the reduction in the NPL share in the corporate sector. So we haven't changed anything when it comes to regulations, but in line with the NPL resolution strategy and the action plan, in accordance with the government and the systemic approach, as well as with the agreement with banks, we have used all possible solutions, and sometimes questions were asked whether the assignment or the sale of NPLs can have some legal risks, for example, the bank secret and so on. So we have been solving these problems by giving interpretations, by clarifying some issues, or perhaps there were fears that some unclarities may cause problems. So we haven't changed the regulations. We have used all possible room provided by the existing regulatory framework.
These are data from 2017. The structure for the first 6 months of this year, we do not have this structure because these are preliminary data. Once we have them, they will probably, well, they'll surely be presented. Jovan, I will just add something to clarify. We are talking about the annual financial stability report as at 31st of December 2016. Mr. Jovic gave you the freshest data about the MPL, and when I talked about FX reserves, I made a clear distinction between. We are publishing this data, for example, about FDI, about GDP, always preliminary flash data and then the final data. But in any case, the trend of decline is evident, and we will not stick to the current measures already undertaken, but we will continue to incentivize all stakeholders to clear their balance sheet in order to create room for new credit activity, because this new credit activity should create new GDP, which will also enable smaller share of public debt in GDP and all other things which mark a betterment for the lives of citizens as well. So this is the GDP growth we are hoping for, which will also be achieved through this channel of reducing NPL.
Bloomberg agency, when it comes to appreciation pressures on the dinar, we have seen them for quite some time. So how durable are they? What is their nature? And continuation through 3, 6, 12 months. We have discussed this issue for so many times. So since April, we have had appreciation pressures, and we expect them to continue until the end of summer. In the third and fourth quarter, we expect the seasonal return to depreciation pressures, but it will be not serious on my side to say with certainty what the intensity of these pressures will be. At the end of the year, always at the end of the year, we always have the need for the import of energy products and so on, and these are the reasons for depreciation pressures, but we expect that the trend of appreciation pressures will continue until the end of summer. We have remained committed to being consistent in intervening. We prevent excessive volatility because we believe that stability is the key word, and the relative stability of the exchange rate should ensure predictability for all market participants to plan their personal and business activities, and this has been shown as a good attitude even when we assess financial stability of the overall financial system of Serbia, not only of the banking sector. I would just like to give you a nice piece of information. With these interventions, we have increased our FX reserves by 295 million. We have bought 640 million, and we have sold 345 million. I would like to repeat once again, we do not stick to theory. We wish to deliver a result to citizens. We do not copy other countries' practices. We wish to focus on the interests of the country where we operate. We will remain committed to ensuring relative stability, both when it comes to appreciation and depreciation pressures.
Are there any more questions? We apologize for the length of this presentation, but this topic requires attention, and our Financial Stability Department also deserves attention. Thank you all.